Welcome to Stock Watch with me, Ntaoleng Lechela. And joining me to unpack your stock-related questions this evening are Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole-in-One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Gents, thanks so much for your time this evening. Perhaps let's start off with how markets have been performing. At the top of the day, it did seem like calm has returned to the markets, but towards the end of the day, it only seems like calm has returned to local markets. I was looking at European markets in the red, looking at US markets also in the red. What's going on there? Are earnings disappointing? What's weighing on markets, JP?
Yes, Ntaoleng, good evening. As is usual this time of year, late January and early February, there's a lot of results that get released. And to your point, a company like PayPal disappointed, the shares down more than 15%. A few others are also disappointing. People are scared about AI and the impact that AI might have on software, even software companies that for many, many years had dominant positions, including large software companies like Microsoft even is down quite sharply over the last month or two. So yes, earnings drives people reconsidering the dominant narrative. And then when people think maybe this could be a big shift because of all these earnings releases, which are a surprise, sometimes to the upside, but the last few weeks to the downside, it means that people reassess, and that can mean sharp moves, sometimes upwards, and then the next day downwards, as is happening today on the offshore side.
So those tech shares, earnings, really what is spooking investors today. I want us to chat about the recovery we've seen in precious metals, Ricus. You know, there's been gold price has been higher, silver, PGMs all taking higher. How have you been making sense of it all? The sell-off sort of happening fast, and then the pickup happening just as fast.
Yeah, I won't call it a recovery at the moment. I would just call it extreme volatility if you look at it over a broader period. So we had this huge momentum trade over January where prices were just being pushed higher by momentum trades. The CME came in and increased its margin on silver futures by about 30+%. And that led to a lot of forced liquidation, and that set the ball rolling, including the appointment of Walsh as Federal Reserve, or the appointment, but not nomination, as Federal Reserve Chairman. And what we've seen is a huge pullback, a bit of a recovery today, but I think it's going to remain volatile while, shall we say, institutions reset that market at the moment. So I'd still be very worried about that. As far as the rest of the market's concerned, as JP said, it's tech, but that's not a reporting period problem. If you take a look back at the American market over the past 3 months, apart from energy and base materials, the sector that's done the best is consumer defensive. It tells you that the market in general over the past number of months have been very cautious in moving into defensive kind of names.
You know, you talk about caution there, and we had that nomination of Kevin Walsh as the Fed, President Trump's top pick for the Fed chair position. And I've been racking my brain around this in terms of where we're going when it comes to monetary policy, because it did seem like, you know, Kevin Walsh did somewhat support the call for easing rates. But when you look at his past, when he was at the Fed, he was quite against the quantitative easing that we saw around the 2008 financial crisis. So what are we getting here, Ricus? Are we getting a hawkish dove, a dovish hawk? What's going on?
Now, Mark Rubio was very much against having balls in different countries. He'll do what Trump says, and if he doesn't do it, he's going to have a very, very bad time.
Yeah. All right, let's move over to you then, JP, just back on what we saw in terms of precious metals. Is this an opportunity to buy, right? We've been speaking about uncertainty. We've been speaking about caution in markets. I'm also just considering the updates we got out today, out from Harmony, looking good, on track to meet its full year guidance. It did, however, highlight operational challenges, right? Looking at it against some of its peers, where are you seeing value when it comes to the gold miners on the JSE? I know commodities, not your fave, but let's get into that.
Not my fave. That's putting it lightly. So even a year ago, I did not think that gold was a buy. And it's call it just about doubled since then. So to ask me now what I think now, I'm even more bearish on gold and therefore on the gold miners.
Okay,
but,
okay.
I've been wrong. I've been properly wrong the last year. So who knows? Maybe I can be as wrong in the coming year. Gold has really surprised me, especially because I understand the narrative and all the reasons that people say why gold has done well. But then there are some other commodities or other assets that do very well in the inflationary environment that I would have thought would also do well. And they didn't do well. So it's a mystery to me, Ntualeng. I would just say that between the gold miners on a relative basis, Harmony went and bought a big copper mine in Australia, and their execution has not been quite as good as the like of AngloGold Ashanti and Goldfields. So in general, between the three, Harmony would be the third pick if you want to take some long and short exposure in the precious metal mining sector on the JSE.
And what about you, Ricus? Any counters that you're finding appealing at these levels when it comes to those gold miners?
Oh, gosh. Well, considering that I haven't actually worked in today's closing prices, but as of yesterday, these, some of these or most of them were down 20+% down from their highs not a few days ago. So there's scope for that kind of trading going on. But as I said at the start, I'm not sure where gold and silver and platinum and all those guys are going to settle right now. As JP said, I also understand the narrative, and I don't think that narrative has changed. So sentiment is on the side of precious metals for the foreseeable future, which might be tomorrow or next week or next month.
Yeah.
But there's a positive momentum story. Then if you go then you say, okay, what miners am I going to buy to benefit from that? First of all, you want consistency in production and execution. Harmony is not doing that. Neither is Impala. So I'm a little bit worried about those. So maybe one of the juniors, Pan Africa, for example, which has got enormous scope for increasing production, which is what you want in this kind of environment. Or otherwise, the old stalwarts, AngloGold, Volterra, for example.
Okay. Let's move over to Raubex, right? Is Raubex a buy, and will the sale of Bauba Minerals be good for the share price, JP?
It all depends on what price they get for it, I think. I do like the fact that they're going back to focusing more on pure construction. I mean, mining and contract mining is a bit of a different game. So from that sense, I think it's good. They should have enough in terms of general construction, road building, and infrastructure to keep them busy. So I like the focus, but it really depends on the price they get for Bauba. So hopefully they'll get a good price. And then they and WBHO are two very nice construction companies to look at on the JSE, especially if some of the green shoots we are seeing in the country actually come to fruition. Then there'll be more construction. And companies like those two will do well. Some of the suppliers of materials will also do well, the likes of PPC, Afrimat, Sapaku even. So I think it's an interesting space at the moment after this whole sector has been bombed out for more than a decade.
Talking about that sector that's been bombed out, Ricus, what about a counter like Cashbuild, right? Also operating in that building materials like space, likely to benefit from the expected green shoots?
I loved what JP just said, because I was looking through that sector as well today and having that same feeling, just taking a look at the share prices, whether it be Wilson Bailey or Raubex or Afrimat. and yes, Cashbold as a secondary possible beneficiary, but that will only pick up if those if the initial sector, the Wilson Baileys, those guys, if they start picking up. But it's an interesting sector, and certainly bombed out, and price-wise, it looks very interesting. But construction companies per se are so volatile.
Yeah.
It's almost like gold mining companies. So again, you have to be your entry point has got to be at the right point in the cycle, which maybe. In which case they are good entry points, but don't forget to sell, because that cycle will turn even if we do see positive momentum picking up over the next 12 months.
Now, another sector that's that's been really in focus is the grocery retailers. And while we are seeing lower food inflation for you and I, going to the store, it does throw a spanner in the works for some of these grocers. And I'm wondering whether the current trend, right, could be detrimental for profit margins for these grocers as they also absorb some of the price increases to stay competitive, Ricus.
Yeah, well, if you take a look at ShopRite's announcement, it's amazing how if you manage your business effectively, you can sort of absorb and still get a pretty good result. But you're quite correct. How much can you absorb, and how much does it affect your margins? So food retailers are getting squeezed. Obviously, if we get consumers with less pressure, that's not really going to matter. But yeah, I'm sort of neutral on that sector at the moment.
Let's continue that conversation around lower inflation, lower food inflation in particular, and how that squeezes food retailers' markets. Before the break, Ricus mentioned how a good quality company like ShopRite is able to absorb those price increases. And I'm wondering how a counter like Pick n Pay, a counter like Spar fares in that kind of environment, JP.
Yes, look, ShopRite are the best operators in food retail, and if they can manage the decreases in the purchasing, which leads to deflation, and because you always have stock on hand, it means you are cutting prices of things you bought before at a higher price the whole time. That is a very difficult situation to manage, and it looks like they'll still get 5 to 10% profit growth, which is excellent. But if that is what the best operator is doing, you can imagine that the rest are struggling. So I think this is an indication that the likes of Pick n Pay and Spar are finding things tough at the moment in a deflationary environment. I would say not only food retailers, all retailers would find it tough in a deflationary environment. Food is very deflationary because of what has happened with food prices, but the stronger rand over the last year means there's deflation in just about everything that's being imported. And clothing as well. So there was an update today from Fushini, also showing very low turnover growth, a big impairment offshore. But, the SA business is also under pressure with deflation. So I think anyone that has got a business in South Africa and that's either importing products that's leading to sharp deflation, or that competes with imported product, which is even worse. And there's another company that made an announcement that I might speak about in that regard. It means it's a tough time with a strong rand, and some businesses are going to close down because of the strong rand.
Yeah. I mean, we never think of it on the flip side, right? You think strong rand and yay, that means great news for South Africa, but we never look at it from that point. I think there was a few weeks ago, we also discussed how a stronger rand could impact the rand hedges as well. All right, let's look at, you mentioned there TFG, but I want us to touch on Pepkor. A question here, is Pepkor a good buy at present? I mean, comparing some of the updates from those clothing players, it seems to be faring better. Of course, the new acquisitions gave it a boost, and the fintech business continues to grow from strength to strength. Ricus, just your thoughts around Pepkor. Is it a good buy at these levels?
I think it's a steady hold. I'm talking my book because that's the one I've got. I don't know. One can probably start looking at. Well, I I'd like to see what's going to happen with TFG Group after their announcement today. But the Mr. Prices and Woolies, they are pretty bombed out. So I won't put a sort of a rebound out of the way. But if you're looking for not only consistency of growth, but the ability to grow, then Pepkor remains my favorite, and I remain in it. Whether it's a buy right now, I'm not too sure. I think a lot of the good news coming from the company is already in that price.
Yeah. And your thoughts around Pepkor, JP? There's a mail here from a viewer also touching on the company, saying, I'm looking for a good growth stock to add to my portfolio. Would Pepkor, Advitech, and Reunert qualify for growth stocks, and which one would you recommend?
Yes, they're quite different. Of the three, my preference would be for Advitech. But on Pepkor, I also think that they are very good operators. And in particular, what they've done very well is use financial services as an enabler and use the provision of credit as an enabler for the retail business. If it wasn't for the financial services part of the business, things would be very tough for them as well. And the low single-digit growth they are showing is to a large extent because they are really pushing credit through the financial services part of the business. But it's working. And they do have that lever that not all retailers have at their disposal. So I'd be comfortable with Pepkor in my portfolio, but of the three, my preference is for Advitech on a long-term basis. I think it's the better company of the three when you take a long-term view.
Just sticking with Pepkor there, Ricus, do you prefer Pepkor based on the scale of that fintech business over the likes of Weaver or Lesaka Technologies?
Well, with Pepkor, you're a little bit more diversified as far as your income stream is concerned, without losing the fact, as I said at the start, that that's your most exciting growth vector in the company itself.
Yeah. All right, let's move over to another question here, mainly on portfolio management, Ricus, touching on diversification. The viewer says, with the Trump chaos and the global crazy times, I have rotated to 40% to the S&P 500, 40% in EMs, 10 on speculation, and another 10 in financial and health counters. Further mentioning there that all of these are in ETFs apart from speculation. Is this the right long-term thesis?
I don't know. In general, and this is historically, emerging markets have periods of outperforming developed markets, but it's not a consistent pattern. But that's looking back over the past 20 or 30 years. I'm not sure whether we are still sitting with that. And there's lots of issues because of that, whether it be demographics in places like Europe, obviously what's happening in America at the moment, and the fact that if you take a look at some emerging market economies and their balance sheets, they're actually looking better than developed countries. So I think for the moment that, because you're not sure, a 50-50 split between those two sectors is probably not a bad idea.
Okay.
And then the 10-20, the 20% allocation spec and financials, yeah, great. That's the sizzle that you add to that portfolio.
And your thoughts around that, how that portfolio looks like, JP?
Yeah, I'm more a stock picker than buying ETFs for trends. And I'm always surprised if you think about an ETF and you think about a certain theme and then you look what's in the ETF, sometimes it's quite different to what you thought it might be. As an example, the biggest emerging market company, so-called, is TSMC. And just because, it's based in Taiwan. But if you think about what product they sell, which is semiconductor chips, all their customers are big tech stocks that are in developed markets.
Yeah.
So it's not emerging market drivers that drive the TSMC share price. It is the global AI spend by developed market countries that are driving the TSMC share price. But you see that then in an uplift in the emerging market index because of where TSMC is headquartered. So I prefer stocks to ETFs.
Okay. talking about stocks, before we get into your stock picks, We Buy Cars still bleeding. That share price, the last time I checked, was down close to 7%. Are we still seeing concern about the founders selling some of its shares? Those shares worth what? Around 866 million rand, JP.
Yes, look, I think that people see the Van der Walt brothers as very good businessmen, very shrewd businessmen. And if they are selling a big chunk of their shares, people get nervous. And I think, shouldn't we do the same? So I think there is some nervousness because of the large sale. They still own more than 5% of the company together. And they are still very much at the helm of the company, as CEO and head of marketing effectively. So I wouldn't get too concerned. We know there's a period of adjustment coming because of the decrease in prices of second-hand vehicles, because of the cheaper Chinese vehicles that are coming in.
Yes.
And the government has got some strange ideas how to address that, making cars more expensive with tariffs, which I don't think is a good idea, but that's for another show. So yes, a little bit of concern, but I would still be happy longer term holding my We Buy Car shares.
What about you, Ricus? Any concerns there? Of course, JP mentioning that the second-hand car market really under strain, being squeezed by the affordable Chinese vehicles.
Yeah, I think JP has said what there is to be said, and I totally agree with him. So I wouldn't be rushing in to buy it.
Okay.
Let's see again what happens with legislation. Let's see how this whole Chinese influx works its way through the second-hand market.
All right, let's get your stock picks. Ricus, where do you see value at the moment?
It's similar to what we were talking about, the construction sector. It's Reunert, which, as you know, is very much involved locally in that kind of spend, infrastructure and things like that. They had a pretty good second half, and I think they probably won't shoot out the lights over the next 6 or 12 months. But what I like is new CEO, and specifically they focus on offshore markets in the form of circuit breakers, where they seem to have maintained their market share in America, which is very important because of the spend on AI centers, and also their defense part of the business, which is doing great guns, if I can use that term, in the Middle East.
All right, let's get your pick then, JP.
My pick is a small cap South African company, Caxton. I picked it about 18 months ago for the first time, and it's up roughly 50% since. But they've also announced a special dividend that'll be payable in the next few weeks because they've got excess cash. And even after that special dividend, if you look at what's on the balance sheet relative to the market cap, you can almost explain the market cap just by the cash on hand and their stakes in other companies, including Impact, which also announced today that they'll be closing one of their factories in Springs because of the strong rand. People can now import, carton boxes cheaper than what they can make it. So that might have put a bit of a lid on the Caxton share price, because the Impact share price is now also under the cosh because of it. But if you look at the sum of the parts basis of Caxton and the large cash balances, I think that gives an opportunity to think, what do they do with their Impact stake? Maybe we are close to a corporate action there. And even if there isn't, on the sum of the parts basis, there's a lot of value in the Caxton share price. So not the most liquid share, it is a small cap, but I think there's value in Caxton shares currently.
All right, gents, let's leave it there. Thank you so much for your time and joining us this evening. That's all for Stockwatch today. Thanks to my guests, Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole-in-One Ruimsig. Up next, the close.